Hello, my friends. This is Dr. Am again with you, supporting your Principles of Economics class. Today we talk about unemployment. Unemployment is an interesting topic in general because it actually affects everyone, every living person, because everyone wants to have some employment capacity, and it's not only because it generates sustainability in form of the income and importing of different goods into our lives, but also it brings some meaningfulness, and it gives us a place called marketplace for self-expression. There are a lot of different benefits that come with employment. So unemployment is undesirable by all means, and it's just a dreadful experience that each policymaker wants to avoid at all cost. Thus, it is important. So all of us face unemployment in some ways, either because we are at school, or it's because we are not feeling well, or because we are looking for a job and we can't find what we want. So there are many different reasons why people are unemployed. Thus, it's important to carefully define what unemployment is, in order to have some consensus, not only for us domestically, but also to compare these statistics internationally. For example, historically, unemployment in Europe has been significantly higher than in the United States. Is there an explanation for that? Yes. And we can try to answer this question or this quandary towards the end of the day. And if you are able to answer this on your own, then you are doing very well. All right, so let's go ahead and start with determining the labor force. So labor force is what is being used by United States Department of Labor to calculate unemployment. In this particular way, we can capture all population that is age 16 or above, and this is what is going to constitute part of the labor force. Now, this part of the population must be working, or it must be both available and look for a job. So that is important. Now, the labor force excludes institutionalized population. That is prisoners, mentally ill, and those who are under 16. So again, labor force excludes those that are institutionalized and those who are under or younger than 16. Let's look at labor force participation rate, because essentially what we want to capture is how do we calculate the labor force that we just defined from previous slide in light of the entire population. It's a very useful statistic. It shows you how institutionalized number of people impacts the unemployment, impacts the productivity, and ultimately gross domestic product. So we have labor force divided by the population, and that would be a labor force participation rate. And now we are moving towards unemployment rate. Firstly, unemployed are those in the labor force but not working. All those in category above. Number two, So unemployment rate in this case can be calculated as the number of unemployed divided by the labor force. That's important because that's what you see is being reported every so often as a front page news. What happens to unemployment rate? And the stock market responds to the news. If unemployment rate goes up, it's a bad news, and that serves as the measurement or indicator how economy is doing. Let's now take a peek at 2011, just when the United States was recovering from financial crisis. In fact, I'm going to look at October 2011 with population recorded at 240 million. Labor force, you already know how to calculate, was recorded at 154. Not in labor force, close to 86 million people. And employed was recorded at 140 million people. Now we have unemployed number of people calculated as 14 million, and you have everything you need to calculate labor force participation rate. So you take employed people and add unemployed people, and then you divide it by the entire population. 64% stands for labor force participation rate. So clearly labor force participation rate is important. When it's going up, you are likely to have more contributors to gross domestic product, and you will probably see as more people defer their retirement or cannot afford to retire at 65, then you will expect that the labor force participation rate will increase. Or when young people choose not to pursue university or not to pursue education following the high school, but go into the marketplace, then it will also change the labor force participation rate. And finally, you can also calculate unemployment rate. You take the number of unemployed divided by the number of employed plus the number of unemployed. 9.1%. That was recorded at that time. The next thing that we want to do is to think about unemployment type. Because unemployment can vary due to a variety of different conditions, there are 4 types of unemployment: seasonal, structural, cyclical, and frictional. Let's start with frictional. Frictional unemployment rate is routine job changes. Basically, that's when people get fired or they quit on their own, their current employment position. That would be frictional. Seasonal type of unemployment is related to the 4 seasons, like construction workers or coal miners. They tend to withdraw from the labor force participation rate during the winter, but they work extended hours during the summer, spring, and fall. So that seasonal type of unemployment is important to consider, because you can compare unemployment rate of the United States with the one in Mexico, but then you have to properly calculate such unemployment rate, account for appropriate type. Because let's say in the state of Minnesota or in the state of Alaska, the winter season is longer than other states, then thus unemployment for construction workers would be higher during those winter months. So, and those seasonal, it's not unusual that seasonal workers may work 80 hours per week for 6 months and 40 hours per week for the entire year, considered 50% unemployed. The next one is structural unemployment. Structural unemployment is typically created by some intervention into the marketplace, such as minimum wage. There are some studies that indicate that 10% increase in minimum wage would lead to increase in 1% of unemployment among unskilled workers. The other type of intervention could be government payments that could be conditioned upon the employment status. For instance, Internal Revenue Service is issuing certain payments distribution to those who make certain amount of money that is above certain threshold and is below a certain threshold. So if you fall into that identified bracket, then you receive extra compensation. It's supposedly distributed to encourage people to contribute more towards employment and regular working hours. Finally, there are some unions. Labor unions can interfere into the marketplace, and when they interfere into the marketplace, they create certain restrictions. Also, minimum wage for the members of the union, or some duration of the labor contract. There is a teachers union, there is a miners union, auto workers union, auto pilot union. So there are many different unions that exist, and they introduce structural unemployment. And finally, you have cyclical unemployment. Cyclical unemployment is related to contraction and expansion of economic activity. It is long believed that economies in Western capitalistic structure undergo certain expansion and contraction over time. So cyclical, it's called a cyclical pattern. So there's a positive or expansion of economic activity during a recession when it comes to unemployment. So unemployment is the positively growing during recession and negatively growing during economic booms. And that is clear by default. As economic activity is increasing, then unemployment goes down during the booms, and when there is a contraction of economic activity, then unemployment goes up during the recessions, economic recessions. All right, the next thing that we want to consider, there are some peculiar parts of unemployment rate when it comes to calculation as such. So you have a steady state unemployment rate that is frictional, added to seasonal, added to structural. And sometimes it's called natural rate of unemployment. As I stated at the very beginning, unemployment rate in Europe is significantly, or has been significantly higher than in the United States, and to a great extent it was due to the structural type of unemployment. So we have answered that question for you. You can look up what structural unemployment is from the previous slides. Cyclical unemployment is helpful to consider As we have discovered that following financial crisis, January 2012, in the United States, unemployment was at 9.1%, and that was the unemployment rate. And compared to 2011, it was 9.2%. So you can calculate the natural rate of unemployment and the difference that constitutes between the natural rate of unemployment and steady state of unemployment is the cyclical unemployment. In this case, in 2012, it constituted 0.6% positively growing. And you can do the same calculations for 2011, and you will find, in fact, that the cyclical unemployment rate was negative at that time. Now we can go to the labor markets. What you have in front of you is one of the most prevalent and popular labor market participation theory, or sometimes it's called migration theory. So what you have in front of you, there's two different geographically located regions with its own labor market supply. So in this case, you have on one hand, you have a demand that is changing on one labor market and supply adjusting on the other labor market. So I want to pause this video at this point and return to this discussion with the next video. Thank you for your time. You get familiar with this graph, and that's where we'll start.